It is Friday, the 20th of March, 2009. This is Brian Shannon from AlphaTrends.net. We finished with a loss here of 50 cents on the NASDAQ 100. For the week, we did finish with a gain of 1.5% in the NASDAQ, and we closed above that 50-day moving average on a weekly basis as well. So that's one encouraging sign here. We continue to be plagued by low volume in this market, and what I had pointed out on the blog yesterday when I didn't do a video was that I had drawn in a trend line here saying that it looked like the buyers were getting a little bit tired in here and that we're starting to see maybe lower highs, and a trend line break might lead to a more meaningful pullback. That's in fact what did happen here, is that we had a pullback down to the 5-day moving average where we had basically closed, and I've been emphasizing the average price since the rally began. Now the rally began on March 10th, so if we take a look at a 9-day chart basically here, and these are 10-minute bars, and here's the volume weighted average price over the last 9 days. So buyers are still in control since this move began. We'll go into this more in depth on Sunday evening. I'll be doing a live event. Again, there will be a registration link live here. If you're looking at it on the blog right now, just above or below, I don't know, but it will be there. So that'll be Sunday evening, 8 p.m. Eastern time, and will run about an hour. So the NASDAQ continues to hold above that level, where basically the average participant, since the market gapped higher on the 10th, is now involved in the queues at about $28.66. That's this level right here. So basically the buyers have maintained control. We do have, though, the lower high and the lower low in here, and we had seen that this little level of support is broken, now potentially acting as resistance here at about 29.50. So I just made that a little bit more clear here by changing to the 10-minute time frame. Here we see again that 10-minute or 5-day moving average. And I got a question: why did I draw the trend line off of here instead of off of this level? And basically because this one had already broken, and at the point I had drawn the trend line yesterday, this trend line is what represented the essence of trend. And trend lines aren't meant to be, as Larry McMillan says, drawn with a straight edge and a ruler, but instead with a crayon. So they're just an idea of where the buyers and sellers may take, where that momentum may shift. But more importantly, we see the lower high here, and now we have a lower low. So we have to be very careful. The 5-day moving average is flattened out. Here's our average price. We see support levels down below. Basically, these are the areas that are going to offer hopefully the more significant support. That VWAP, which will be rising, so that might actually be met with this prior level of resistance right here at about 28.90. This is the VWAP line right in here. I'm just going to delete that out. And then we had this little pullback area of support at 28.30 and then 28.80. Those are more important support levels. Short term, we need to get back above 29.55 or so and hold above there, and then take out this high. On the daily time frame, we're still stuck within this overall range, so nothing to be excited about, I think, in either direction right now. We'll get more detailed, like I said, on Sunday evening. Let's take a look at the financials. The financials did make it back above that rising, the declining 50-day moving average here, and came up just short of this trend line here. Again, the 50-day moving average is declining. You can't get excited about a move above it. What's more important is the direction of that 50-day moving average. Bullishly, we held above the 10-day moving average in here today, and as I was pointing out on Twitter, where I'd posted this chart, that we're holding right now right at that level where the average participant has been involved in this market since March 10th. Basically breaking below there and holding below there. If this VWAP starts acting as resistance, and this will be a 10-day VWAP on Monday, then it means the sellers have regained control. So right now we're at a pretty critical area for this rally to either continue or to decline further. To me, when you have indecision like that, you have to look at the longer term time frame. The longer term time frame is still in a downtrend, guilty till proven innocent. So if you're still holding long positions, I think you're playing a very risky game in here. course, it could work, but what do you need to get it to work? You need this market to recover at least back above here. We're below the 5-day moving average. We're making lower highs and lower lows. Now's not the time to be long financials in my mind. Maybe after a pullback and then recovery, but right now it's looking very dangerous for these financials. We had this 750 level had been in prior support, and we had actually gotten above, but weren't able to hold above this level right here. So this may have trapped a lot of people looking at this as the inverted head and shoulders pattern, and now they, from failed moves come fast moves. So be prepared for difficult trading on the long side in financials. I still think that there's a lot for that group to prove. The semiconductors, the financials were down today 52 cents. That did put them down on the week. The semiconductors were also down 1.25% for the week, and you can see where these semiconductors got right up to the middle of the range, the recent level of resistance. It got up there on increasing volume and turned away from there. So this level, obviously on a daily time frame, is going to remain very important at 19.5. We've got this market now heading back towards the middle of the range that it's been in. We have this level in here at about 1767, but we also have this 9-day VWAP right in here. So it's basically right at it, actually $18.14. So really it could go either way here. Primary trend is more neutral than anything. So the semiconductors, I don't think will do the leading next week, but next week's going to be very important, obviously. Russell 2000 was down $1.43 or 3.4% for the week. They did finish with a gain of 1.5%. Taking a look at that same trend line that I'd drawn in yesterday on the blog, and then this morning we had looked at the 10-minute time frames, and I had warned that basically, the financials were dropping, and if these levels of support gave up, that basically it could get a little bit uglier for the longs. This market came down to the prior little level of resistance that had been supported, just about $40 a share. We are below the 5-day moving average. The 5-day moving average is flattening out. So it tells us that this is either distribution before the next decline, or it's accumulating and getting ready to consolidate these gains and move higher. When you look at the longer term time frame, odds favor further downside, not a reversal. We had this market rally up to the declining 50-day moving average. That 50-day moving average was basically also approximately the same level we were looking for as the target of this inverted head and shoulders pattern. We cleared that by a little bit, but this inverted head and shoulders pattern I'd shown on the blog last week as something that looked too good to be true. In fact, it did materialize, got up to this price level basically that it had suggested it had the potential to go to. That was also almost exactly the 2/3 retracement of the February or late January high to the recent low. So a lot of reasons to look for selling in there. We did actually see the evidence as well. So we've got this market transitioning, it looks like, back to seller's control. We need to see it get at least above this 41.25 or so, I think, and hold above that level for this market to have a chance to recover. It's still possible that maybe we get down towards 38. Stabilize, this 5-day moving average comes down, and I'll get into that on Sunday, but right now it doesn't look like it's going to pay to be bullish early next week. Same goes for the S&P 500. The SPY had broken this trend line yesterday, late or early today, and got below, also made this pattern of lower highs and lower lows. We're seeing the pattern of lower highs and lower lows. We've got a 5-day moving average flattened out. This market needs to at least get above there and hold above there with some volume ideally, but on the daily time frame, where did we get to? Right up to that $80 level, right up to the declining 50-day moving average. This is where there were supposed to be sellers in this market. We saw them, and the only bullishness we can find is on the shorter term time frames, which really is, and that's really becoming less so that there's bullishness found there. Again, this is a psychological level. I think that purple line, that's the average price, volume weighted average price since this market gapped up on March 10th. More on Sunday.